Charles Schwab, Chief Investment Strategist, Sonders joins us now. Lizanne, I know Sarah's going to have questions about that. I just want to get your take on earnings season so far, see if it's impacted sort of your overall view. I know we're early in still, but we're starting to get, enough of a survey sample.
We are, and I think there was obviously hope coming into second quarter reporting season that we would have a quarter similar to the first quarter in terms of significant beat relative to what was quite a low bar. And I'm not sure we can repeat that in the second quarter. And some of the bloom may be coming off the earnings rose, which is some of the high-profile disappointments this week. But what also happened in the first quarter was it was either record or near record negative guidance, and that just set the bar so low. When you look at things like yields, PMIs, lending conditions, all of the factors that are highly correlated to earnings, it shows that the path of least resistance is still down and that we're not hitting the trough point. I don't see an implosion in earnings by any means, but I think that hope that first quarter was the trough, I think may be dashed in the second quarter.
What about this little burst of optimism? And it might be kind of this. People are feeling better about the economic situation because of the stock market, and people are feeling better about the stock market because of the economic situation. But there are some interesting signs. I pointed to Philly Fed this morning, Steve's All-America survey, that consumers and businesses are feeling better about future activity.
Yeah, so that was interesting with a PMI like Philly Fed with weakness at the headline level, but an improved outlook. And I think that is appropriate to think about the current environment. I think there are a lot of uncertainties right now. Yes, we're in disinflation, but we know that the June numbers were flattered by the year-over-year base effects versus June of last year. The economic data, for the most part, has been good. I think claims being lower is to benefit. But you saw some weak housing data today, and that's coming in the aftermath of what has been very strong housing data, and a hope that prior beleaguered area, consistent with what has been our rolling recession thesis, might be an offset to anywhere like services or labor market that starts to get hit. So I'd say the economy is still fairly mixed. But yeah, we've seen a pickup in confidence. Consumer sentiment has picked up. That relative to consumer confidence, consumer sentiment, based on what questions are asked, tends to be biased a little bit more based on what inflation is doing. Consumer confidence has a little more of a labor market bias to it. So it's important to keep that in mind when you do the comparison between those numbers as to what's driving either lower optimism or positive optimism. But there's certainly a pickup, at least in longer term hopes, that we're coming through this.